If you're sitting on more than 100 ounces of silver right now, in any shape or form, whether coins, bars, ETFs, futures, mining stocks, or whatever, this is for you. Not for people just thinking about buying an ounce or two, but for the folks with enough silver that the number on Friday's close, $84.40 per ounce, makes your stack worth at least $8,440, and maybe way more if you've hoarded hundreds of thousands or even millions of dollars worth. Because starting Monday, February 24th, 2026, things in the silver market are going to affect you differently than someone with a tenth of that. The risks, the opportunities, and what could ruin you if you're not paying attention don't just scale, they transform. So buckle up, close every distracting tab, and give me your full attention for the next 20 minutes, because this might be the most important silver talk you hear this year. Here's the deal. 100 ounces isn't just a nice round number. At current prices, it's around $8,440, which is when silver stops being a fancy paperweight or casual hedge and starts looking like a real financial holding. Below that, price swings don't move the needle much. A 10% price move might be a blip. Above that, a 10% price swing means you're moving hundreds of dollars in your portfolio on any given day. Take January 30th's 31% intraday swing. It was $2,600 in gains or losses per 100 ounces. At 500 ounces, that was a $13,000 roller coaster in a single session. And guess what? The chaos from January has only gotten worse. 4 interest rate hikes, vaults running low, Chinese export controls stretching into their second month, Shanghai premiums pushing higher, and paper versus physical silver at historic extremes. If you don't know how this impacts your specific silver holding structure, you're flying blind. Know exactly what you own, and I mean really know it. If it's physical silver in your safe, you don't have counterparty risk, but good luck selling 100 plus ounces quickly without a price discount or delay. If it's PSLV shares, you're dealing with paper silver controlled by JP Morgan, who also happens to hold massive short positions and manage deliveries. That means if the paper silver price tanks but physical silver holds or rises, your screen shows losses while the metal behind the scenes gains. PSLV holders have allocated metal with serial numbers and third-party verification, but suffer from premium fluctuations that can instantly cost you 4% or more during volatility. Futures traders are juggling massive leverage. Think controlling $422,000 with $23,000 in margin, where a price move of 5.5% wipes you out. Mining stocks add all the drama of company risk, debt, and operational issues, with price swings amplified 2 to 3 times silver's moves. Pick your risk poison, but understand the score. Now the practical takeaway. If you hold 100 ounces or more, have a written plan before Monday's open. Write down exactly how you'll act if silver spikes above $90 or crashes below $80. Know your exact cost basis, calculate your real profits or losses, and assess your insurance coverage, because most homeowner policies cover a fraction of your holding. Organize receipts, photos, serial numbers, and claims info now, not after something disappears in a fire or burglary. Finally, set clear 30-day targets and limits so you're not just reacting emotionally to volatility. Play this game with preparation, not wishful thinking. Owning more than 100 ounces isn't a casual hobby anymore. It demands respect, a plan, and brutal honesty about what you're actually holding, and how you'll react when the market jolts you. Because in silver's next big act, the difference between surviving and getting wrecked is simple. Preparation beats conviction every time. Do the work before 6 p.m. tonight, or get ready to learn this lesson the hard way.